Hey everyone, welcome back. Today we're talking options trading. Specifically, the strategies we use at Advanced AutoTrades.
Right.
We know options can seem intimidating at first.
Yeah.
So we're here to break down our three main strategies.
Okay.
Monthly trend, weekly trend,
Yep.
and weekly premium.
Exactly.
So by the end,
Yeah.
you'll have a good idea of which one might be right for you,
For sure.
whether you're just starting out or have some options trading experience.
That's right. We want to give you a feel for how each strategy works,
Okay.
the kind of risk and reward you can expect, and who they're best suited for.
So before we get into the specifics,
Okay.
let's talk about what all three strategies have in common.
All right.
First off, you'll be getting trade recommendations and insights
Yeah.
straight from our team of experienced options traders.
Think of it as having a direct line to the pros.
Oh, wow.
We'll be sharing our analysis and trade ideas with you
Great.
via email or SMS,
Okay.
whichever you prefer.
Got it.
Then you have the choice
Yeah.
to either execute the trades yourself manually,
Mm.
or you can set up an automated system in your account.
Yeah. That's a great option for people who are busy
Yeah,
or just starting out.
definitely.
And it's important to remember that you always have full control over your capital.
Absolutely.
You can stop the service and the trading at any time.
That's one of the core principles we believe in.
Okay.
Empowering you to make the decisions
Right.
that are right for your own financial journey.
Absolutely. Okay, so let's dive into the first strategy,
Right.
monthly trend.
Yep.
This one is designed for those who prefer a more hands-off approach
Right.
and have a lower risk tolerance.
Okay.
What makes this strategy tick?
Well, with monthly trend,
Yeah.
we're essentially betting on a long-term steady rise in the SPX index,
Okay.
the S&P 500.
Got it.
The strategy involves selling a credit spread
Uh-huh.
at the beginning of each month.
Okay.
That means we're selling options, hoping the market moves in a way
Yeah.
that makes those options expire worthless.
So if the market goes up even slightly,
Yeah.
we could potentially double our investment.
Yes.
Okay.
But of course, no strategy is foolproof.
Right.
That's why we have a stop loss in place.
Okay.
If the market takes an unexpected dip, the stop loss is designed to limit our potential losses.
Okay, so there's a safety net built in.
Exactly.
But what makes selling credit spreads on the SPX a good strategy in the first place?
It comes down to a couple of factors.
Okay.
First, historically speaking,
Uh-huh.
the stock market tends to go up over time.
Right.
Second, the SPX, being a broad market index, is generally less volatile than individual stocks.
Okay.
That means we can make reasonable predictions about its movements.
I see.
Combining those factors makes this strategy a good fit for more conservative investors.
Right, so it's not about chasing huge gains,
Yeah.
but more about steady growth over time.
Exactly.
And speaking of steady growth,
Uh,
what's the track record for monthly trend?
It's been quite impressive
Oh, wow.
over the past 11 years.
Okay.
Monthly trend hasn't had a single losing year.
Wow.
Even in a challenging year like 2022, when the market saw significant declines,
Right.
the strategy managed to break even.
Wow. 11 years without a loss.
Yep,
That's pretty remarkable.
it is.
I can see why it's a popular choice.
Yeah.
Especially for folks who are new to options trading
For sure.
and those with IRA accounts.
Absolutely. It's particularly well suited for IRAs
Okay.
because it can be traded in a cash account.
Got it.
Plus, it works well for both large and small accounts. And with only one trade per month,
Yeah.
you're keeping your trading commissions low.
So it sounds like a pretty accessible strategy.
It is.
What's the minimum investment to get started with monthly trend?
You can start with just $2,000 in your account. And the minimum risk per trade is only $250.
Got it.
As you become more comfortable,
Yeah.
you can always scale up your investment.
Got it. So starting small is an option.
Exactly.
Now remind me again about those average returns.
Yeah.
They were pretty impressive.
Since 2013,
Okay.
monthly trend has averaged around a 50% annual return
Wow.
with just a 5% risk per trade.
Okay.
And if you're feeling a bit more adventurous and bump that risk up to 10%,
Yeah.
the average annual return jumps to around 100%.
Okay. That's definitely something to consider.
It is.
So to recap,
Right.
we're talking about a 1.2 risk-reward ratio, an average win rate of roughly 55%.
Yeah.
And the potential for some significant returns.
Yeah.
All with just one trade a month.
That's right.
Not bad at all.
Not bad at all.
No.
Now, I know some of you are thinking,
Okay.
what if I want to be a bit more active?
Right.
That's where our next strategy comes in.
Okay.
Weekly trend.
Okay, bring on the action. Tell me more about this weekly trend.
Okay, so with weekly trend, we shift gears from a monthly view to a weekly one.
Okay.
This strategy involves an average of 3 trades per week.
Wow. Okay.
With the potential for up to 5.
5. Okay.
All on either SPY or SPX.
Okay. So that's a noticeable step up in terms of trading frequency.
It is.
Yeah.
You've got to be comfortable with a bit more action
Right.
and potential for fluctuations.
Okay. Makes sense. So what's the difference between trading SPY versus SPX with this strategy?
Well, you have the flexibility to trade SPX in a cash account.
Okay.
Or SPY in a marked account.
Got it.
That's one key difference. Another is how we handle the trades themselves.
Okay.
With SPY, we aim to close the trades before they can be assigned. With SPX, we typically hold them until expiration.
Okay. So there are some nuances to consider when choosing between SPY and SPX.
Exactly.
Now, I'm guessing this strategy comes with a higher risk profile compared to monthly trend.
You're right. This one is for investors with a moderate risk tolerance.
Okay.
Weekly trend can have a drawdown of up to 30%. But the flip side is that it can also recover quickly.
So it's a bit more of a roller coaster ride,
Yeah.
but with the potential for quicker gains.
That's right.
I'm curious, under what market conditions does this strategy shine?
This strategy really thrives in a rallying market. When the market is consistently moving upwards, weekly trend can capture those gains effectively.
Interesting. So it's about riding those waves of momentum.
It is.
Compared to monthly trend, we're looking at potentially higher returns, but also higher risk.
Exactly. With weekly trend, you're typically looking at a 2.5% or 5% risk per trade. And because we're making multiple trades each week, you have more capital in play compared to monthly trend.
Okay, I see. So how much capital do you need to get started with weekly trend?
You can start with a risk of just $50 per trade if you're trading SPY, and $250 per trade for SPX.
Got it. So smaller accounts might be better off starting with SPY, while larger accounts could consider SPX.
That's generally a good guideline.
All right, let's quickly recap weekly trend.
Okay.
A 1.1 risk-reward ratio.
Okay.
An average win rate of around 60%, and trades that typically last between 3 and 7 days.
Yes.
Sounds pretty dynamic.
It is.
Now, what about traders who are ready to step up their options game even further?
Well, for those who are ready to take on a more active role and have a higher risk tolerance, we have weekly premium.
Okay. Weekly premium. This sounds intriguing. Let's dive into it.
Okay.
What's the core strategy here? So weekly premium, this is where things get a bit more advanced, right?
That's right. Weekly premium is designed for traders who are comfortable taking on more risk and actively managing their trades. Think of it as the strategy for those who really want to leverage the power of options.
Okay, so paint me a picture. What kind of trading are we talking about here?
With weekly premium, we primarily focus on selling a strategy called an iron condor. It's a neutral strategy that aims to profit from a decrease in volatility, meaning we're essentially betting that the market will stay within a certain range.
I see.
We target a specific profit, and if the market moves against us, we have a plan in place to adjust the position.
You mentioned targeting a specific profit. How do you determine what that profit target should be?
We use a combination of technical analysis and our understanding of options pricing. We look at things like the average true range, moving averages support, and resistance levels, and other indicators to get a sense of where we think the market might move over the next few days.
So there's a lot of analysis that goes into setting up these trades. What's the typical time frame for a weekly premium trade?
We typically focus on SPX weekly options that expire in 3 days.
Got it.
This allows us to take advantage of something called accelerated time decay, which means the value of options decreases more rapidly as they get closer to expiration.
Interesting. So by focusing on short-term options, you're essentially trying to capitalize on that time decay.
Exactly. And by managing the trades actively, we aim to lock in profits when the market moves in our favor.
Now, you mentioned that weekly premium is suitable for investors with a high-risk tolerance.
Yes.
What makes this strategy riskier than the other two?
The primary reason is that this strategy involves using margin. You'll typically need to put up 60% to 70% of the capital required to hold the position. That means if the market moves significantly against us,
right,
the losses can be magnified.
Okay, so it's definitely not for the faint of heart.
Right.
So let me make sure I've got this straight.
Okay.
Weekly premium,
Yep.
high risk, high reward.
That's right.
And active management is key.
Exactly.
What kind of returns are we looking at here?
We target around 15% to 25% return per month on the allocated capital.
Okay.
But remember, that comes with a higher level of risk.
All right, so we've covered 3 distinct strategies.
Yes, we have.
Monthly trend for
Yep.
those who prefer a hands-off approach.
Right.
And lower risk.
Yep.
Weekly trend for those who are a bit more active. And have a moderate risk tolerance.
That's right.
And weekly premium for those who are comfortable with higher risk and active management.
Exactly.
Each strategy has its own strengths.
It does.
And is designed for a specific type of investor.
For sure.
Absolutely. It all comes down to your individual risk tolerance, investment goals, and how much time you're willing to commit to managing your trades.
That's right.
It's important to remember that there's no one-size-fits-all approach to options trading.
I couldn't agree more.
Right.
And regardless of which strategy interests you, it's always crucial to do your research.
Okay.
Start small.
Got it. And remember, we offer free trials.
We do?
For all 3 strategies. It's a great way to get a feel for how they work in real time before committing any capital.
Absolutely. We want you to feel confident and comfortable with whichever strategy you choose.
A big thank you to everyone for joining us today.
Yes, thank you.
We hope this gave you a clear understanding of the different options trading strategies we offer at Advanced AutoTrades.
Until next time, happy trading, everyone.
And remember, knowledge is power. See you next time.